Hey everyone, we have a very upside down stock market if you believe that things that are likely to raise the Federal Reserve's interest rate, in other words, good news on the economy, is likely to raise the interest rates because the Federal Reserve will try to tamp down the growth. If you believe that, what we've been receiving is a lot of good news that is bad news for the Federal Reserve raising interest rates. But I think what's happening is the stock market says, no, the good news is good news. And we think the economy and the stock market can handle these higher interest rates. And the other thing is, I think the stock market thinks that the Fed is about done. Okay, they might have one more interest rate hike. Their next meeting is September 20th, and there's over 90% chance they're going to keep it the same. The big deal will be November 1st, because that's when they are likely to raise interest rates because gas prices have gone up. That's going to slow things down considerably. The stock market right now, November 1st is a long ways in the future. And there's thoughts that the great American consumer is going to hit a wall in early 2024. That's a long time away. The stock market just wants to run now. You know, the VIX is a measure of volatility. It goes up when the stock market is likely to go down. And it's very low. It's like 13. It's crazy to short the general market right now. People shorting the general market using triple leverage funds are making no money. Technology is hanging in there, looks to go higher in the short term. The short term trend has been down, the longer term trend has been down, but it's starting to turn around. And that's because the stock market is insisting that the good news is good news. And hey, we don't care what the Fed thinks because we think they're lying. They're not going to be able to raise interest rates very much, if at all. In fact, if something breaks, that'll force them to lower interest rates, which would be a bad thing. But I don't think the stock market thinks that things are going to break. They simply think things are going to slow down, which is an overall good thing. The big news this week, which really helped the stock market, was the initial public offering, the IPO of ARM, ARM. This designs chips for smartphones and other computer devices. 70% own a device with an ARM design chip in it. The major companies it works with is, of course, Apple, the giant, and Qualcomm, Samsung, but it's in hundreds of companies' devices. It's a big deal. It's the first major tech IPO since 2021, and it was a big deal. And it went up 25% on the first day and kept going up in the aftermarket. So it's really an encouraging sign for the market. And the market just does not want to believe that that good news is bad news, which is refreshing. Retail sales went up 0.6% this month, which is a big deal to do in a month's time. Only 0.1% increase in retail sales was expected. And the reason it went up is kind of bad news too. Gas costs more, and that's counted in retail sales. The price of gas going up. But other things like Barbenheimer movie set where Barbie was paired with Oppenheimer, that raised a lot of cash. And the concert by Taylor Swift is having a noticeable effect on the stock market. Not to mention, Beyonce is also out there making lots of money for hotels and restaurants and items that they sell connected to the concerts and the concerts themselves, which they're charging hundreds and close to $1,000 for tickets. These are real money makers that are really influencing the economy. China has not outright banned Apple phones, but it does not want government workers to bring the Apple phone to work. They have concerns about security, as the United States has concerns about security too. Their release of the information on all their devices, notably the Apple phone 15 on Wednesday, the stock went down on Wednesday. And I think it's because it was kind of lackluster. The only new things really, the cord changed to a USB-C cable so that it conforms to the Android phones, which is good to see. Also, it improved. The big deal for me is it improved the camera. I always had an Android phone because I have to have the best camera. I love the camera on the Samsung. They have so many pixels. But Apple's camera now will have 48 pixels, which is really high quality. They kept the price of the lower models. They kept it low. They kept it around $1,000, the same as it's been. And they only increased the price on the upper models, the Pro models. They increased the price by at least $100 to $1,100 or more. People that can afford it buy those phones, and that won't make that much difference to them. But on the regular models, I'll call them, they kept the prices the same, which is good for inflation too. I've been making videos on the dangers of artificial intelligence, and it was good to see that Musk met with Congress and is telling them about the potential dangers and is urging some regulations. You know, computers are really getting out of this world, so to speak. They can make inferences, they can make generalizations, they're making predictions. And the big deal is they can train themselves, do this in an iterative fashion so that they become much faster, much quicker than we could ever train them to be. I feel like we're in an era of science fiction. I was born the year the television was dispensed to the public. So I've seen so much change in my life. It's just unbelievable. And it's increasing. And it's getting faster. Driverless trucks are coming to the road, driverless semis. Wow. Okay. And they're moving away from California because California has more regulation, and they're going to be doing it more in Texas. In Texas, they're just given more freedom of the road, less regulation. Texas is still going to require a driver in the cab, but they're predicting that by the end of 2024, people in Texas are going to start seeing semis going down the road without a driver in the cab. Now, I can hardly believe it's going to come that fast because I think there's going to be some public resistance to it. Let's say 2025 is more likely in my mind, just because I think seeing that big of a rig going down the road with no driver, boy, you've got to have such faith in the technology. Jamie Dimon of Chase Bank has warned that regulators might not really know what they're doing, that they're requiring too much capital to be held by the banks. And this is being done by the Federal Reserve in case things break, that the system won't be wiped out. I think the Fed has done a really good job with its bank term funding program, its discount window, and requiring banks to hold more capital. They're basically making it so that if the system breaks, it can take care of it. And I think that inspires more confidence. It also takes more money out of the economy, which is good for inflation. Now, in China, they're doing just the opposite. They're allowing banks to have less capital on hand so that they're basically trying to stimulate their economy by leaving the money in the economy and not stored in a vault in a bank. China is in real trouble. They're starting to stimulate things, and it's helping a little bit. But like last week, the dollar got stronger against the yuan. The yuan lost about 4% of its value, which is good news for us because we can buy their goods cheaper. So it's good for inflation. Wall Street's reaction to the CPI increase, I think, was just totally unexpected, at least by me, and I think many other people. The CPI rose to 3.7% year on year. 3.6% was expected. So the overall headline number was slightly worse than expected. And it previously was only 3.2%. So it was quite a bit worse month to month. In fact, month to month, the headline number was 0.6% worse increase. But this was expected. So I guess if you expect bad news, it's okay now. The core CPI, it increased to 4.3%. It increased 0.3 0.3% month to month. 0.2% was expected, and it previously has been 0.2% the previous month. So, it came in as expected on some things, but it came worse on the headline number. It came in month on month, very bad, but it was expected on the headline number. So I guess going up by 0.6% is okay if you expected. I was just flabbergasted by the results. The core CPI was worse than expected, going up 0.3% rather than 0.2%, which was expected and which it has been doing for previous months. I was kind of flabbergasted because this was built up as going to be such a signature big deal. I'm starting to believe, Peter Lynch, that maybe I should spend less time paying attention to the macro environment, although I won't stop doing it just because I've seen how it moves the market in the short term. And then the next day, on Thursday, we got news of the PPI, Producer Price Index, which usually forecasts what the CPI is going to be. It was expected to come in at 0.4%. It came in at 0.7%. You can't make this stuff up. So the market went down, right? No, the market went up on Thursday. It kept going up. I think it was helped a lot on Thursday by that ARM IPO being so successful and going up 25%, and it being big tech, first big tech since 2021. Hey, I think Wall Street was in the mood like, let's party like it's 1999. Continuing in the bad news, oil is going into the 90s. They're already talking about $100 oil per barrel oil. And it's because Russia and Saudi Arabia put limits on how much oil they're going to release, and they're sticking to it. This is having a really bad effect. Also, you have the 10-year bond yield is going up. This is supposed to be negative for stocks. Stocks keep going up. It seems like we've turned a corner where the stock market no longer believes that the Fed can raise rates seriously, or at least that November is going to be the last increase. I'm thinking around the November 1st might be about the time to invest in the market, because if they increase the rate by 0.25, I think it's going to be a dovish raise. In other words, they're going to raise it, but they won't be very hawkish about future increases. On the other hand, if they don't raise it on November 1st, this stock market's going to keep on sailing upwards, which is why I think they're almost going to be forced to raise the rates on November 1st. They won't raise them on September 20th, but they're sure to do it on November 1st, in my mind anyway. I've been told over and over, and it seemed to be true, that the dollar going up in value in comparison to other currencies would make our stock market worse because other countries have trouble buying our goods. They're more expensive for other countries. The dollar keeps going up. It's above 105. That doesn't stop the stock market from going up. The stock market right now is the little engine that could. It's the ever-ready bunny. It's going to keep going up, or at least it's threatening to do so. I'm tempted to get back in. I can scarcely believe what I see before my eyes. And the 5% yield on bonds and money market funds, close to that, is so rewarding for right now. I'm going to wait and see how it pans out. I am tempted because it's starting to turn to the point where good news is good news, which is always my favorite place to be with the stock market. Also, jobless claims were supposed to come in at 225,000, and they came in at 220,000. Good news. Less people don't have a job, okay? That's good news, but that's supposed to be bad news for the Federal Reserve, which is what we're supposed to be afraid of. But the stock market is interpreting this again as good news. So is good news good news? Can we handle these higher rates? That is the $64,000 question. They continue to have major inflation problems in Europe, and they're really in bad shape because they're in stagflation. They are going into recession and having higher inflation at the same time. Stagflation. They're forced to raise interest rates in spite of the economy's not doing that well because of the inflation. The European Union just raised interest rates by 0.25% to 4%. On a lighter note, they just appointed a UFO chief to investigate the mystery craft of flying saucers, so to speak. The truth is out there. It'll be good to discover what's going on with this. Maybe we can get some answers from other worlds that we can't find here, right? Thanks for listening and watching. Be sure to hit the subscribe and like button, and I will plan to see you in the next one.